The tech sector is very popular amongst investors right now, with dominating companies like Meta, Google, Amazon, Microsoft, and Apple, which big tech makes up over a quarter of the S&P 500 at 27%. That is insane from just a handful of companies. Even with the heightened valuation of these companies, I see so many pouring into these stocks. Big tech companies have gotten so massive and hungry, they are trying to eat each other, as that is the only thing to satisfy their hunger. It is getting harder and harder to acquire companies due to monopolistic concerns from the FTC and other governmental entities. Big tech has now turned to mimicking each other to try and steal market share in order to remain dominant in their respected areas and try to spur new areas of growth. Now, before I reveal current tech battles that are occurring and one that I think will occur soon, I want to show you a transparent look at my portfolio performance. Right now, I'm up 8.64%. This has fallen a few percentage points as a strong jobs market has led investors to fear more Fed rate hikes. But overall, if you have any questions, let me know. So here are some current tech battles, but be sure to stay till the end of this video for something powerful you will want to see. So the current tech battles. The first one I want to mention is the one between Elon and Twitter versus Mark Zuckerberg and Threads, the new Twitter-like app that they just released. You bet social media empire Meta does not want anyone else to have a popular social media app, so they are going for Twitter. As Meta is so large, they must find new areas of growth, as the metaverse has kind of stalled out for now, for the time being. Plus, there's the whole cage match between Mark and Elon that we might see that would be highly entertaining, but this is one of the current tech battles. Another one is between Microsoft with their Bing search engine and OpenChat GPT AI integration versus Google and Google's search engine with Bard AI. I don't like that name Bard, it just sounds odd. But the only thing I want to say about this is I want to read a quote from Nadella, who's the CEO of Microsoft. He says, "At the end of the day, they're the 800-pound gorilla in this. That is what they are. And I hope that with our innovation, they will definitely want to come out and show that they can dance. And I want people to know that we made them dance, and I think that'll be a great day." So enough said there. There's a battle going on, and we'll see if Microsoft can take any of Google's market share. Another battle is between Meta with their Quest devices and Apple with their newly released Vision Pro devices. Now, Apple seems to hate Meta. For example, the privacy changes that hurt Meta's revenue by more than $10 billion. So of course, Apple does not want another company to have a device that can host and be the central point to apps, tools, and other features that could take power away from Apple and give it to another company like Meta. So they are creating their own version to keep customers in their ecosystem. Another battle is Amazon with Amazon Prime TV versus Netflix. Now, Amazon has 205 million subscribers versus Netflix's 232.5. Of course, some of that from Amazon is just their normal Prime membership, but they are the two strongest streaming services in my opinion. Disney could be up there, but is trailing far with all its current issues. So I think we see some intense competition in the future with these two, but it already is intense. Amazon has more movies and shows than Netflix, but Netflix has more original content. Amazon provides more value. You can bundle their TV with other services like free delivery, Amazon Music, free ebooks, whole food discounts, and more. But Netflix provides more quality content, and Netflix is still the best in my opinion, and I would not put it past Amazon to make some moves to try and steal market share from Netflix. Now, one future battle that hasn't happened yet, but I think could happen. Let's start with this. What profitable social media app is virtually untouched in terms of strong competition? I'll give you a hint. You're watching it right now. That's right, YouTube. There is no real competitor currently, but there is one company that could succeed here, and that's Meta. Meta has the user base and capabilities to make this happen. So the battle would be between Google and their YouTube app, social media app, versus Meta and their YouTube equivalent app, whatever they might call it. I am surprised Meta has not gone down this path yet, but it would be risky as YouTube already has itself established with deep roots. I also like that YouTube is not a part of Meta personally, but I think it is a valuable option for Meta to target next. We shall see if this prediction of mine comes true. So the question, is big tech too big, and are they still good investments? Again, stay till the end for a powerful visual. Now, the tech industry is powerful, and I still see it as a sector that will dominate for quite some time. It's great to hold some of these companies in your portfolios for many reasons, but my warning, tech stocks have a lot of muscle right now. But the thing about muscle, the more you have, the more work it is to maintain it. We are seeing a battle for market share, and some of these dominant companies today will not remain that way forever. There are companies that once were at the top and envisioned by investors as forever stocks or forever companies, such as GE, IBM, AT&T, Blockbuster, Polaroid. There's so many others, and now they struggle or no longer exist. The thing is, competition happens. Big companies do make mistakes. Industries, trends, and the economy do pivot. Innovation occurs, and all of these things could negatively impact any big tech company out there. I don't care even if it's Apple. Of course, buying quality companies with large moats, great financial performance, and other important things that I utilize for my quality checklist greatly help in us choosing solid, long-term, profitable buys, but it does not guarantee it. And that is why it is important to keep up with your companies. If we hold individual stocks instead of ETFs, we must remain diligent in keeping up to date with these companies and the industries they are in. As any signs of weakness or disruption, we must be prepared to make moves. So yes, I plan on holding Microsoft forever, but I'm not going to just ignore it because I think it's a for sure long-term win. I will constantly evaluate and analyze this company and all my companies to ensure my portfolio is successful, even if that means selling out of a popular company where I see deteriorating aspects of the business that I think will harm my investments. So yes, I think tech is a great investment. Yes, it is currently highly valued, but long-term can bring great profits. But just remember that nothing is guaranteed, and these tech companies that are battling each other, eventually some of those will lose. And I want to leave you with this visual. This shows the top 10 holdings of the S&P 500 over the decades from 1980. And the one thing you'll see is the top 10 constantly change. There you'll see in the 1980s, you see IBM, AT&T, Exxon, General Electric, and then poof, they're gone the further you move. Of course, Exxon is making a little bit of a comeback now in 2023, but we'll see other companies now that are coming up, such as Pfizer and Procter & Gamble and Walmart, but then they kind of fall off pretty quickly. And now, of course, in 2023, we have a lot of big tech there, and if you think that these will stay in the top 10 forever, you're mistaken. Things will change, and I think that's where investors kind of get nearsighted. They invest in these companies and they think, I can pour all this money in, and then when I retire, I'll be rich. No, it's a lot more complex than that. You have to stay on top of things, and that's why a lot of people do better in a broad market ETF or an S&P 500 ETF. So yes, look at this, use this, show this to others, because we cannot just stay complacent and just sit and think everything will go well. We must continuously look at our investments, analyze them, and make necessary moves. So I really hope that this helps put some perspective to investing in the current big tech companies. It's not meant to scare you, but make you aware of something real that does occur and happen that we cannot ignore. So let me know which of the top 10 companies in 2023 you think will fall off pretty quickly, or any that you think will stay on for decades to come. I can see Apple as a clear argument, one that will stay dominant for quite some time, but I just would like to hear your opinions. So with that said, thank you so much for watching today, and we'll see you next time on Mark Arnold's Finance.